What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be checking out Applied Materials stock. And as you can see in the last year, the stock is basically flat now. The valuation has come down a lot. If we look at the trailing PE here, you can see that it's trading at roughly 19 times earnings, and that is just in line with the average pretty much, but it's definitely come down a lot from where it was trading at in July. So right off the bat, I would say some of these numbers are looking good, and then some of them are looking kind of weak. The revenue has been the last 5 years or so of revenue has been pretty strong. They did $27 billion of revenue for 2024. Keep in mind, this is a $132 billion company. Free cash flow yield of 5.5% is pretty solid. That's a good number. And net income has been looking good too, although the last couple of quarters it's kind of been slowing. But I mean, if you look from 2019 to now, it has come a long way. So that's the good thing with net income. Free cash flow solid. Cash to debt ratio solid. 9.5 billion of cash, only 5.5 billion of debt. They've been pretty consistent with raising dividends every year, which is good. They've been consistent with buying back shares, which is good. So there's lots of good metrics here. Return on invested capital, 30%. That's solid. I would say, let's look at profit margins. Profit margins are about 26%, very strong. But as I was reading some of the things down here, one thing that stuck out to me was that it looks like, so exposure to China is stabilizes at approximately 30% of revenue. I would say, especially with Trump coming to office now, I would say that is one concern is, if they're reliant on China too much, that could hurt the business. And I mean, but from a valuation standpoint and from a business fundamental standpoint, most of the fundamentals look good, right? I mean, growth is slowing a little bit, but the valuation is cheap and they're in a good industry. I mean, look at the forward PE, 17 now, when that's definitely on the lower side of things. If we go to what analysts have them doing, we can see that EPS is going to 940 and then 1050 next year. So the growth is looking okay. Revenue growth is only 8%, which is not a lot, but I mean, you're only paying 17 times earnings. So I would say it's not a bad investment. I would say it's not a bad investment because the valuation is cheap and it's not like you're getting a junk company. You're getting a pretty solid company that has proven to have pretty consistent numbers, a little bit of growth, high profit margin, high return on capital. Net income is looking solid. We're talking $7 billion in net income for a $132 billion company. That's solid, right? All these numbers are strong. Free cash flow yield of 5.5% is strong. The cash to debt ratio is strong. Dividends, shares outstanding. Everything is looking solid here besides for, again, just small things where like I don't think this company I don't know if their moat is big enough to where they wouldn't be in danger of something like, you know, geopolitical pressures from China, stuff like that. But everything else, it looks pretty solid. So I would say if this is one that you're interested in, I don't think this is a bad one. I really don't think this is a bad one. I'm not seeing a lot of problems here. So that is my analysis for Applied Materials. Let me know what you guys think down below, and I will see you in the next video.